Okay, thanks so much for joining us here at the Network Breakfast. Once again, it's Tuesday morning, and we have the group all assembled, and they're going to say good morning to you and tell them, they're going to tell you who they are and maybe even how you could get a hold of them if you're ever in Cleveland, Ohio. So we're going to start off by saying good morning to Shalom. Good morning, Shalom.
Good morning, my friends. I look forward to hearing more from Ray about reverse mortgages because he is the expert in our community on that topic. Reverse mortgages are helpful because some of my clients over the years have been able to tap some of the equity in their home, still have a home to leave to their kids, and yet also have some current income to pay for their living expenses. At Right at Home, we help adults, seniors to stay safe in their homes. God bless y'all.
Excellent. Thank you, Shalom, and thanks for being here. We're going to say good morning to Judy. Good morning, Judy.
Good morning, Tom. How are you?
Great. Thank you.
Now that everybody knows about the sleepless night that I had. I am a freelance writer, and I am a freelance writer for businesses. I do the bulk of my business is doing blogs for people's websites. In order to keep your website active is the only way to do it is to have constantly changing words. And that's what a blog does.
Yes, that's what it does. And new content really helps keep the attention going on whatever kind of web page you're doing, whether it's a blog or an internet web page or whatever. New content is imperative. Okay, so we're gonna, yes, imperative. So we're going to move on, and we're going to say good morning to Rob Lord. Good morning, Rob.
Good morning, everybody. Rob Lord, Thriving Financial. I'm the one that gets all your investments in order for you so you can retire. And just so you know, Ray has a very good product that we actually do use in financial planning at times. It's not our end-all be-all, but it is helpful when we need to use reverse mortgage to help generate some income. Rob Lord, Thriving Financial.
Excellent. Thank you, Rob. Thanks for being here. We're going to say good morning to Chris Walters. Good morning, Chris.
Good morning. Chris Walters with See-Through Windows. I provide vinyl replacement windows, new construction and patio doors. I cover a territory from Port Clinton to the Pennsylvania border, Cleveland to Canton. Right now, as of yesterday, the manufacturers are now on a 6-week turnaround for windows. This is unprecedented in the industry, and they say it's going to get worse. Telephone number 330-604-0403.
Great. Thank you, Chris. Thanks for being here. We're going to say good morning to one of our great friends and a wealth of knowledge, Mike Bentley. Good morning, Mike.
Good morning. I just wanted to let everyone know that Rob is staying at my beachfront condo today, as you can see.
I knew that looked familiar.
Yeah, I'm back here in Cleveland, and I let Rob stay at my beachfront home. But I'm Mike Bentley from the Brooks and Stafford Company. I am your resource for insurance questions, especially questions regarding health insurance, group benefits, Medicare, Medicaid, and please feel free to give me a call. And I will make sure I put my number and make it available to you. Thank you.
Excellent. Thank you, Mike. Thanks for being here. We're going to say good morning to Trina Gigax. We're so happy to see her.
Good morning. On the other end of that, you probably heard about my sleepless night, so hope I don't have bags. My name is Trina Gigax, and my company is Fresh Eyes Reading. I also do copy editing and copywriting. I like to work. If you don't want to do your own writing, or if you aren't happy with the writing that you have, or someone has done it for you and you're not sure it's just the way you exactly want it, then that's what I can help out. I help you with your writing, whether it's blogs, web content, letters, newsletters, just anything that the public's going to read. It's really important to have a professional go over it. To make sure that it's not only free of errors and grammatically correct, but easy to read and that the message gets through. Trina at fresheyesreading.com.
Excellent. Thank you, Trina. Thanks for being here. And now we're going to say good morning to a stalwart of the Network Breakfast, Jeff Hexter.
Good morning, everyone. I'm Jeff Hexter with Always Keep Computing. I work with professionals working from their homes who are stuck with technology problems and have run out of people to ask for help. An example of that, well, this was not a home user, but I had a client the other day who was using an old laptop as a server for their office. If you know people doing that, maybe I should have a conversation with them. And if their disaster plan is the same as their regular plan, but with more alcohol, we should talk. Thanks for the laugh, Ray.
Great.
Thanks, Tom.
Thank you, Jeff. I want to remind everybody that Jeff, on Wednesday mornings at 9 o'clock, if you're in Cleveland, you could go to Jack's Deli. Look that up. We had such a good time last week as we sat there laughing at Jeff and his friends. Or no, we're laughing with them. We weren't laughing at them. Oof. How improper that was. But it was fun. And I was lucky enough to see Trina. And we had a wonderful breakfast. And that's Wednesday morning at 9 o'clock at Jack's Deli. I wanted to remind everybody that he does this service. You bring your whatever and have him look at it. And he'll probably figure it out. Okay, so now I'm going to say good morning. Good morning. My name is Tom Basie, and I'm an IT professional here in the Northeast Ohio, Cleveland, and outing regions, where I can do almost anything with a computer. I can help you get one. I can help you make it go better, and I can help you interact with it better, as well as a host of apps and solutions to making you more productive with your machines. So when it comes to that, in the Cleveland, Northeast Ohio area, this is Tom Basie. You could come here to the Network Breakfast and see how you can get a hold of any one of us, but especially me right this moment. So thanks so much for joining us here at the Network Breakfast. And at this time, I'm going to turn it over. I'm going to share the screen, and we're going to hear from Ray Antonelli, one of the few reverse mortgage specialists, especially here in Ohio and Northeast Ohio. So we're going to say good morning to Ray. And while he's introducing himself and talking a little bit, I'll share the screen and put up his PowerPoint presentation. Good morning, Ray. Thanks so much.
Good morning, Tom and the group. I appreciate the opportunity to make this presentation. I've been a reverse mortgage specialist since 2005. And I've been a licensed loan officer since 1998. Today we're going to cover the top 7 myths of reverse mortgages. There are a number of folks out there who really aren't interested in a reverse mortgage just because they feel that there are some things that the bank does that they don't agree with, and most of them are myths. Next slide, please. So again, the Cleveland Magazine named me one of the top mortgage professionals in Northeast Ohio, and it's something you had to apply for, but still worthwhile mentioning. Next slide, please. So before we begin the top 7 myths of reverse mortgages, here's some fine print. Please note, in order to qualify for a reverse mortgage, at least one of the homeowners needs to be 62 years old or older. There were some people who typically the wife may be younger than the husband in many cases, and there were some people who took out a reverse mortgage, and so the laws changed recently so that even though the younger person, the younger spouse who's on title, doesn't qualify for the reverse mortgage, they're still allowed to stay in the house rent-free. They just can't access any of the funds if their spouse dies, but they're still allowed to stay in the house rent-free until they pass or until they decide to move. So there can be one person who is not 62 years old on title and still qualify for the reverse mortgage. And there are many financial tools we offer, and reverse mortgage are one of them. In many cases, I've been also talking about the fact that rates are at a historic low. We're still in the twos on most forward mortgages. So that is something that if anybody is considering refinancing their current mortgage or wants to buy a home at this point, I can help with that type of financing as well. And we haven't seen rates this low since I've been in the mortgage business for almost 25 years. They've never been in the twos before. So I urge you, if you have any plans to try to save money on your mortgage, or if you're planning on purchasing a home, to get in touch with me, and I'd be happy to pre-qualify you for that mortgage as well. So if you already have a reverse mortgage, it would be wise to consider refinancing to take advantage of these historically low rates. There is no payment required on a reverse mortgage. And when you take out a reverse mortgage, there always needs to be equity in the home, and you can never borrow 100% of the value of a reverse mortgage because there needs to be always room to add the payment on every month that you're not making. Next slide, please. So typically a reverse mortgage helps you stay in your home as long as possible. A reverse mortgage is a special type of loan made to older homeowners to enable them to convert the equity in their home to cash to finance living expenses, home improvements, in-home health care, or other needs. With a reverse mortgage, the payment stream is reversed. That is, the payments are made by the lender to the borrower rather than monthly repayments by the borrower to the lender, as occurs with a regular home purchase mortgage. A reverse mortgage is a financial planning tool that enables seniors to stay in their home or age in place and maintain or improve their standard of living without taking on a monthly mortgage payment. And the process of obtaining a reverse mortgage involves a number of different steps. Next slide, please. A reverse mortgage is different from a home equity line of credit or home loan, which many banks and thrifts offer. With a home equity loan or line of credit, an applicant must meet certain income and credit requirements and begin monthly repayments immediately, and the home can have an existing first mortgage on it. Now, a reverse mortgage can have an existing mortgage on it as well, but it must be low enough so that the reverse mortgage can pay it off in the process. In addition, there is no restriction on the age of borrowers. In general, reverse mortgages are limited to borrowers 62 years or older who own their home and have at least 55% equity at age 62. So in other words, if the home is worth $100,000, the mortgage amount should be $45,000 or less. In general, that's true. The borrowers usually have a choice of receiving the proceeds from a reverse mortgage in the form of a lump sum payment at closing, fixed monthly payments for life, a line of credit, or a combination of 1, 2, and 3. So there's a lot of flexibility in how the funds are received. And the proceeds of a reverse mortgage that a senior homeowner can receive mostly depends on the borrower's age and the home's property value. The older the applicant is, the larger the monthly payments or line of credit. Seniors only need minimal income or credit requirements to qualify for a reverse mortgage. As an example, I originated a reverse mortgage for a lady who was 90 years old. Now, because actuarially speaking, she was that much closer to passing, the lender could loan her a lot more money. She qualified for 80% of the appraised value, as opposed to as little as 45% of the appraised value, for example. So the age of the borrower, as well as the how much equity they have in the home, is what primarily determines how much they qualify for. And the older you are, and the more equity you have in your home, the more that you qualify for. Next slide, please, Tom. Unlike a home purchase mortgage or home equity loan, a reverse mortgage doesn't require monthly repayments by the borrower to the lender. You can make a payment. There's no restriction on that, but it's not required. A reverse mortgage isn't repayable until the borrower no longer occupies the home as his or her principal residence. This can occur if the sole remaining borrower dies, the borrower sells the home, or the borrower moves out of the home, say to a nursing home or to Florida. The repayment obligation for a reverse mortgage is equal to the principal balance of the loan plus all the accrued interest and plus any finance charges paid for through the mortgage. This repayment obligation, however, cannot exceed the value of the home. So let's explore that a minute. It's almost guaranteed that there's going to be equity left over for the heirs of the client. Very rare, especially in this market, that there isn't equity left over. And since a reverse mortgage is just a mortgage, that means when it gets paid off and the home is sold, whatever equity is left over goes to the heirs or goes to the client if they decide to move to Florida, for example. They take that with them. And also, the repayment obligation cannot exceed the value of the home. So what that means is the only way the lender can get repaid is when the home sells and the mortgage is paid off there. If the mortgage is not covered by the value of the home when it's sold, then the insurance kicks in and the insurance company makes the lender whole. They cannot go back to the heirs. They can only go to the home to get repaid, and that's it. The loan must be repaid by the borrower or by the borrower's family or estate with or without the sale of a home. So that means that if the heirs want to keep the home, and they can either refinance that loan with a regular mortgage or pay it off from the funds in the estate and keep the home. It doesn't have to be taken out of the family's hands if they don't want it to be. If the home is sold and the sale proceeds exceed the repayment obligation, the excess funds go to the borrower or borrower's estate with the heirs. In other words, again, it's just a mortgage. There's nothing special about it when it gets paid off. Most of us, when we sell our home and move to another home, we have a mortgage, it gets paid off, and we keep the balance. And with the reverse mortgage, it's exactly the same. The mortgage gets paid off, and whatever equity is left over goes to either you if you're the owner of the home, or if you've passed already, it goes to your kids. Next slide, please. Again, if the sales proceeds are less than the amount owed, the shortfall is always covered by insurance. It is not the responsibility of the borrower or borrower's estate. In other words, your heirs will not have any financial liability ever. If the sales proceeds are less than the amount owed, the shortfall is always covered by insurance. It is not the responsibility of the borrower or borrower's heirs. A borrower cannot be forced to sell their home to repay a reverse mortgage as long as they occupy the home, keep the home in good repair, as well as paying the taxes and insurance. And now on to the top 7 myths of reverse mortgages. How to comfortably stay in your home. Reverse mortgages, the top 7 myths. The number 1 myth is I would be selling my house to the bank, and that is absolutely false. A reverse mortgage is just a mortgage. I think that's the 3rd time I've said that in this presentation. You keep title to the house. The lender will add a mortgage on the property just like normal, but you will still have complete control over it because you still own it. Next slide, please. My heirs won't inherit anything. That is also false. Your estate only owes the balance on the reverse mortgage, and the balance is however much you've borrowed plus interest. Your heirs get the rest of the equity. Next slide, please. I might outlive the loan. That is also false. An FHA HUD reverse mortgage are designed specifically so that you can't outlive the loan. When you get the reverse mortgage, there is mandatory FHA mortgage insurance. That insurance guarantees that even if you live to be 100 or more, you can never owe more than the value of your home and you can never be forced out of your home, and you can live rent-free in your own home. Next slide, please. Social Security and Medicare will be affected. That is also false. Money from a reverse mortgage is not considered income because it is a loan. For this reason, a reverse mortgage does not lower Social Security or Medicare benefits, and of course, you don't owe taxes on this money either because it is a loan. Next slide, please. Again, I would have to pay taxes on the reverse mortgage. That is false. You already paid taxes on the money when you were putting the equity into your home. When you take it out again, it is not taxable. Think of a reverse mortgage as a certificate of deposit, okay? When we take out a CD, we give a bank or an insurance company a sum of money, and we typically also specify the term. 3 months, 6 months, a year, 5 years, 10 years, what have you, okay? When the CD matures, we go back to the bank or the insurance company, we give them the certificate, and they give us all the principal back plus all the accrued interest. And that is exactly how a reverse mortgage works. So what that means is the bank takes out a CD on your home. They hold a CD in the form of a mortgage. They give you all the cash. And the only difference between a CD and a reverse mortgage is that you decide when to cash in the CD, not the bank. They're holding the CD, but you decide when to cash in the CD. So if you decide to get away from Cleveland winters and you want to move to Florida, you sell the house, the CD gets paid off, the mortgage gets paid off, and you get all the equity that's left over. Or if you pass, the CD gets paid off, the mortgage gets paid off, and your heirs get what's left over. So that's exactly how a certificate of deposit works. The only difference is you decide when the CD gets cashed in. You decide when the mortgage gets paid off. Also, with respect to expenses for a reverse mortgage, there's almost no out-of-pocket expenses on the part of the senior. Typically, the only thing we have them pay for is the cost of the appraisal, which appraisals now are much more expensive than they used to be. They're in the $450 to $600 range for a single family home. And even that we can help with if there's a problem, okay, if there's an issue coming up with that sort of cash. But there are almost no expenses that the senior has to come up with. Typically, the expenses are all built into the loan. A reverse mortgage is also one of the most heavily regulated loans on the market. There is mandatory counseling for the seniors before we can begin processing the reverse mortgage. We're required to give the seniors a list of 9 counseling agencies, and the senior must call any one of them. We can't even steer them to a particular agency. The counseling usually lasts between 20 and 45 minutes, depending upon how many questions are asked of the counselor. And anyone can attend that counseling, by the way. The children of the senior, the sister of the senior, the brother of the senior, an accountant, a CPA, an attorney. Anyone can attend and ask questions. We like as many people as possible because we want everyone on the same page for the benefit of the senior, okay, when the reverse mortgage takes place. That counseling, then the counselor issues certificates of counseling. They send the senior 3 certificates. 1 certificate is signed and returned to the counselor. 1 certificate is signed and given to the reverse mortgage specialist like myself so we can start processing the loan. And the 3rd one is kept by the senior. And when I have that counseling certificate in place, then the process starts. We can give the senior an estimate beforehand of what they might qualify for, but nothing materially happens until we get that counseling certificate back, and then the process starts and takes about as long as the typical forward mortgage takes, so 30 days or less from the time we receive the counseling certificate, the loan does close and the funds are transferred to the senior. Next slide, please, Tom. Okay, as I mentioned before, the myth is that there are big out-of-pocket expenses, and that is absolutely false. All the costs, whether closing costs or interest, are financed. That means there is never any out-of-pocket expenses at any point in the reverse mortgage except the appraisal. Oh, and by the way, the counseling does cost as well. The senior can pay that up front, or they can ask the counselor for an invoice, and that invoice is supplied to me, and we put that in the loan, and it's paid for out of the proceeds of the reverse mortgage. Next slide, please. A reverse mortgage is similar to a home equity loan. That is also false. First, home equity loans may have many requirements such as high income, low debt, and good credit that a reverse mortgage does not. Second, if you don't pay for any reason on a home equity loan, you can end up being foreclosed on by the bank, and this can never happen with a reverse mortgage. The home equity loan is just like a regular first mortgage, except that it's in second position typically. And with a first mortgage, it's in first position on the loan. That's why they call it a first mortgage. And both of those loans require monthly payments. If you do not pay, eventually the bank will get around on issuing a foreclosure notice to you, and the home can be sold at sheriff's sale. And again, this can never happen with a reverse mortgage as long as the taxes and the insurance are paid and the home is kept up. Then the lender leaves you completely alone until you decide to sell the home for any reason. Next slide, please. Okay, so I would suggest that you give me a buzz to let me know how much cash you might qualify for if you have an interest in a reverse mortgage, or if you simply like more information. Okay, I have some information I can forward to you. Of course, Tom is going to be posting this video on YouTube. And by the way, I want to give a note of thanks to Tom Basie for helping me with this PowerPoint presentation. He did a masterful job of putting the slides together, and I really deeply appreciate it.
Thank you.
Okay, so this is now the time for questions. If there are any questions, don't hesitate to let me know if you have any.
I have one. Is there an originating cost for starting the process of reverse mortgage?
No, there is no cost to start the process except for the cost of the counseling. And again, I think the counseling is about $125 if I'm not mistaken. And the senior can choose to either give a debit card or credit card to the counselor to cover that cost, or to ask for an invoice, and the counselor will provide an invoice, and that loan, that counseling will be paid for out of the proceeds of the reverse mortgage.
Okay. How about getting an appraisal? Is that always required?
Actually, an appraisal is typically always required with a reverse mortgage. However, over the past year or so, it's been either a desktop appraisal or a drive-by appraisal as opposed to an in-home visit, because seniors, of course, were one of the primary targets of COVID, and they wanted to minimize interaction with the senior. So it was allowed to have the appraisals be a drive-by appraisal rather than an in-person inspection.
And the appraisal is paid for by the borrower?
The appraisal is paid for by the borrower, and typically we get a debit or credit card from the client prior to the appraiser coming out and doing the appraisal. However, I counsel with the client extensively beforehand, and if they're having trouble coming up with that money, in many cases we can put that in a loan as well. We'll work with our clients, whatever they need, we help them.
Ray, do you handle these loans outside of the Cleveland area?
I do. I'm licensed in the whole state of Ohio. I'm also licensed in California and in Tennessee, and we're looking to get a Florida license as well.
When did the reverse mortgage phenomenon pick up speed?
The reverse mortgage was, I believe, started by Ronald Reagan that long ago. The only thing that he specified when the Secretary of Housing Urban Development came to him, at the time, I think it was Jack Cook, the ex-football quarterback.
Jack Kemp,
pardon me.
Yeah.
He said, I don't ever want seniors to be hurt by this. In other words, he never wanted to see headlines that there was going to be an issue with a reverse mortgage. Okay. So that's when the counseling got started early on to make sure the senior knew exactly what they were getting involved in before the loan was actually processed. And that's why we can't start anything until we have those counseling certificates and the senior has acknowledged that the counseling took place.
Okay. Well done, Ray.
Thank you. I think this completes the presentation. Of course, there's my phone number and my email address. Don't hesitate to call me if you have any questions whatsoever, and I'll be happy to answer them for you.
Excellent. Yeah, and this panel's been up now for 5 or 6 minutes, so that the YouTubers will be able to write this down and get a hold of you, a true reverse mortgage specialist. And Ray tells all of you and us, thank you. He even notarized it.
Yes, thank you muchly.
Okay, so there we are. Thank you for your kind attention, and Ray thanks all of you for listening, and I'll stop sharing it now and we'll go back to full screen. Okay. So, being that some of us here are not even 62 yet, you have to have at least one person in the household that is 62 to originate a reverse mortgage.
That is accurate. In fact, as I said in numerous weeks prior to this, the children of seniors, in many cases, I get referrals from them because they are concerned about their parents being taken care of in their old age. And of course, as Rob knows, we do reverse mortgages for a lot of different reasons. Reverse mortgages saw an uptick when we had the downturn because folks wanted to sell their investments off, and the smart financial counselor would tell them, don't sell off your investments, take out a reverse mortgage for living expenses, because we all know everything goes up and it goes down. Whatever goes down must come back up again. So the financial investments would recover and start paying their dividends again, et cetera. And instead of selling them off and taking a loss, you can maintain them and take out a reverse mortgage for living expenses.
Hey, Ray, what happens if you have a senior who mentally may be suffering from dementia and has given power of attorney to children? Can a reverse mortgage be handled by their children who may not be 62 in behalf of their parent?
This is very common as we get older. I've done a number of reverse mortgages where either children or even a next door neighbor has power of attorney, and I was still able to originate the reverse mortgage on behalf of the senior and have the person who has the POA sign for them. They also, by the way, need to be counseled. Okay, the person who holds the power of attorney needs to be counseled just like the senior needs to be counseled. And here's another interesting thing. The neighbor had power of attorney for this one lady in North Olmsted. Not arthritis in her hands were so bad she couldn't sign the papers. So that's another reason why the POA was in place, so that they could sign the paperwork for her.
Wow. Ray, once you're in a reverse mortgage and a couple of years goes by and you change your mind and want to reverse your reverse mortgage, is that possible or no?
Absolutely. A reverse mortgage is just a mortgage. Okay, that's nothing more. You can get rid of it. You can change it to a forward mortgage and start paying again. You can do whatever you want with it. You know, again, it's just a mortgage. Also, it's probably easier to get out of a reverse mortgage than it is to get out of a regular mortgage, because there always is required to be equity above the reverse mortgage so that the lender can add that payment on that you're not making every month to the loan balance. Okay, so, you know, for example, if somebody, in fact, many people in the downturn of 08 to 012, you know, they took out 100% loans on their home. Okay, and then in the downturn, the value of the property dropped and they were underwater and they couldn't get out of those loans because they couldn't sell the home and have the mortgage paid off. Okay, and that's where short sales came involved. Okay, a lot of people did a short sale because their mortgage was underwater and the home was not worth what the value of the mortgage was. And of course, they were everybody. They were you and I. Okay, they weren't necessarily seniors, although that happened for seniors too, in seniors too. And so the short sale industry got started because the mortgage value exceeded the value of the home. And currently with a reverse mortgage, that's extremely rare. Okay, number one, we're in a rising market in terms of real estate values, and number two, built in, there's always equity in a reverse mortgage because of the way the program is set up. You know, again, at age 62, you can borrow roughly 50% of the value of the property, the appraised value of the property. And as you get older, I use the example of the 90-year-old who could borrow about 80 or 85% of the value of the property because actuarially speaking, they were that much closer to passing. But a reverse mortgage is just a mortgage, so it can be paid off at any time for any reason that the owner chooses.
So, Ray, when the homeowner passes away, what are the options again?
The options again are having the heirs of the estate buy the home and pay off the reverse mortgage, and they can buy it with cash or they can buy it by refinancing the mortgage and taking over the payments. And typically
Right.
the heirs are less than 62, so they wind up taking out a forward mortgage for it. And the third option, which is the most common option, is to sell the home and take whatever cash is left over and divide it amongst the heirs.
And does the bank ever just take over the home if the heirs don't want to sell it?
Yes, and that's another option, and I'll describe how that works.
That's where I was going.
Yeah, when when I was first getting started with reverse mortgages, I did a reverse mortgage for a lady who lived on a street off of Miles or Kinsman, and at the time the home appraised for about $80,000. She was fairly old, so she qualified for like $60,000 out of the 80. And again, it was driven by her daughter who contacted me. Her daughter was her caregiver. And a year or okay, I've been taking care of her for so long. She called me in March, okay, and it was still cold outside. And she said, you know, I'm faced with a situation here where I have to, pardon me, I have to maintain the home, and I have to pay taxes on it, and fix it up a little bit, you know, before I put it on the market in June or July to get the maximum amount. And I'm just tired. I really don't want to do that. So I called the lender and I asked her what was going on. I told them what was going on, and they said, it's no problem. Just have her send us a letter stating, I'm the executor of the estate, and on and after this date, I will no longer be responsible for this property. And I will come in, the lender will come in, and they'll foreclose on the estate. It was the only thing of value in the estate. You know, there wasn't any cash left over. They would come in, they would change the locks, they would winterize the property, and then get it back on the market, you know, to sell in the next 60 to 90 days in the middle of summer when it's good time to be selling property. Okay. So yes, a senior or their heirs can give the property back to the bank and relieve themselves of the responsibility. And that's especially true when there's very little equity left. Okay.
Right. So like in financial planning, sometimes we can take a lump sum, whether you take the payments from the house or we take a lump sum and we reinvest that to get payments somewhere else. And then the house is just sitting there. It makes it easier for the heirs when they don't want to deal with selling of the house, splitting of everything, that they just turn it back over to the bank, especially with little equity.
Correct. Also, Rob, you may know this, almost, I would say 90% of the reverse mortgages that are originated are HECM mortgages, home equity conversion mortgages, and they're sponsored by HUD and FHA. You have to be FHA certified in order to do a reverse mortgage to begin with. But there's a whole universe of reverse mortgages above that are not government guaranteed. Okay, they don't have the insurance that a conventional reverse mortgage has on it, but they'll go up to $4 million. So if you have borrowers in that category and they want to take advantage of a reverse mortgage, they still can. So for example, if the home's worth $4 million, the loan to value might be, you know, 25 to 40%, but they can still borrow $500,000 to $2 million on a $4 million or $10 million home, for example. And that's a substantial amount of money and not have to make payments on it.
Right. And then the other nice thing is the investments they have, it goes to the beneficiaries, bypasses probate if they name beneficiaries, and beneficiaries do not have to worry about selling a home.
Exactly.
Wow.
It's just a strategy, and we don't use this very often, but there's sometimes a need to do these strategies, and it really helps out.
By all means.
So Ray, I got your number. I may be in touch someday.
Not a problem.
Very informative, Ray. Thank you. I've got to run, everyone.
Yep, same here.
Have a good one, Mike. Have a good one, Rob.
Bye.
Thank you, Rob. And of course, thanks all of you. And we're gonna shut it down for the YouTubers out there. And for those of us locally, we could stay here and continue to talk a bit. But for YouTube, we're gonna say we have another good one in the can, and we'll be putting it up soon. So please check it out and subscribe if you can, and tell all your friends. So until next week, thanks so much for the Network Breakfast. This is Tom Basie. Have a great day.